Are the US markets finally back on an uptrend, and is the decline and correction finally over? Hey guys, welcome back to episode 29 of US Stock Market Technical Analysis. In this video, I'll be sharing with you my February analysis of the US stock market. So we'll be taking a look at the S&P 500, the Dow Jones and the Nasdaq. Before we take a look at the US stock market for the month of February, if you're new to this channel, my name is Linus, and in this channel I share all things related to the stock market, so both investing and trading. If you want more videos such as this, make sure you subscribe to my channel because each week I release 2 new videos about investing, trading and the stock market. Alright, so we'll first begin by taking a look at the S&P 500 followed by the Dow Jones and then the Nasdaq. So for the S&P 500 over here, you see that the S&P 500 has been moving up for the past couple of days. In fact, in the past 4 trading sessions, the S&P 500 has made consecutive higher highs. And that's quite a bullish sign considering the fact that the S&P 500 fell below the 200-day moving average just a week ago. If you watch my previous US stock market analysis video, I shared that in the event that the S&P 500 decline, the first level of support that I'll be taking a look at is this level over here, which corresponds to a key price area and the 200-day moving average. So that was the first support that I take a look at. The next level of support that I shared in my video was this level over here at around $422. So even though the S&P 500 broke through the first key support level that I'm looking at, it did manage to find support at the next key price level. In fact, if you zoom in over here, you see that for this day, on this candlestick over here, which is on the 24th of January, we had a very bullish candlestick over here. So this candlestick over here with the long lower wick is a very bullish candlestick because this is a variation of the bullish pin bar. If you want to know more about candlesticks, I included a link on the top right of your screen right now. So this variation of the bullish pin bar is a very strong bullish signal for us as investors and traders in the stock market. But we always want to take things into context. So while a bullish pin bar is a bullish signal, we want to see it appearing in the correct context. So in this context, the bullish pin bar appears at a key support area. So when a bullish pin bar forms at a key support area, this further confirms the bullish signal. In fact, if you take a look at the volume over here, the volume on that day was also especially high. So what this tells us is that on this candlestick and at this price area over here, we know that there are a lot of buyers buying up the S&P 500 on this day. And that is why the S&P 500 managed to find support at this key price level over here, and then it stopped its decline over here and then moved back up. So is the correction and decline in the S&P 500 finally over? Not just yet. For me personally, I want to look for 2 confirmations. So the first confirmation is I want to see prices breaking above the 50-day moving average. So even though the S&P 500 has managed to climb back above its 200-day moving average, the S&P 500 still hasn't gone back up above the 50-day moving average. And we zoom out over here, we see that the 50-day moving average is a key moving average for the S&P 500. So I'm waiting for the confirmation for the S&P 500 to move up and above the 50-day moving average. So if the S&P 500 continues to move up, I expect it to encounter quite a bit of resistance at this price level of around $460. The second confirmation that I want to see from the S&P 500 is for the S&P 500 to make higher lows and higher highs. So for this decline over here, the S&P 500 was making lower highs and lower lows. So we see over here, this was one of the highs, this was another of the highs, and this was one low, and this was another low. So you can see that the S&P 500 were making lower highs over here and lower lows. Right now, the S&P 500 is just moving straight up. And as mentioned, I believe that the S&P 500 will encounter some resistance at this price level of around $460 in the form of the 50-day moving average. So when it encounters some resistance over here, it's likely to decline, and then I want to see prices falling back to this support level over here, and then finding support over here before moving back up above the 50-day moving average, and then making higher highs and higher lows. So this will be a low, this will be another low, and this will be another low, and then this will be a high, this will be another high. So I want to see the S&P 500 making higher lows and higher highs. So these are the 2 confirmations that I want to see in the S&P 500 for the month of February. The next index that we'll be taking a look at is the Dow Jones. For the Dow Jones, the recent price action has also been very bullish. So if you take a look over here, it's almost similar to the S&P 500. So over at this candlestick over here, we had a very similar bullish pin bar. So there was a long lower wick over here. So prices went all the way down before it managed to close back up well above its low for the day. So we had the bullish pin bar over here, and this bullish pin bar also appeared at a key price area at around $336. But for the Dow Jones, the price action is a bit more bullish compared to the S&P 500, even though both price actions look quite similar. So the only difference is that the Dow Jones managed to close above its 50-day moving average. So the 50-day moving average is this red line over here. So as you can see on the most recent candlestick, prices managed to close above the red line. So prices not only managed to break above the 50-day moving average, but you also managed to close above the 50-day moving average. So that's one thing going for the Dow Jones that the S&P 500 currently doesn't have. And now that the Dow Jones is above the 50-day moving average, the next area of resistance that I'll be taking a look at is this price level of around 364. So you can draw a resistance line across, and you can see that at this price level, the Dow Jones have encountered resistance previously at this point over here and this point over here. So now that the Dow Jones have moved above the 50-day moving average and closed above it, the next area of resistance would be this price level of around 364. So what I want to see ideally is for prices of the Dow Jones to move above the 50-day moving average and continue to remain above that moving average. So probably prices will rise further up over here, encounter some resistance, then find support at the 50-day moving average and then continue its advance over there. That's my bullish case for the Dow Jones. My bearish case for the Dow Jones is that the Dow Jones provide a false head out over here and then it closed back below the 50-day moving average and declined back to over here. So this is the first key area of support that I'll be taking a look at for the Dow Jones. So that's my analysis for the Dow Jones. Now let's take a look at the Nasdaq. For the Nasdaq, prices also form a similar bullish pin bar over here, and even though prices undercut this key price area of around $353, we see that the Nasdaq did not undercut the key price area by a lot and it did not stay below that key price area for long. In fact, it only took the Nasdaq 1, 2, 3, 4, 5 trading sessions before it managed to go back up and above this key price area. So the undercut over here by the Nasdaq below this key price area is more likely a shakeout to shake out the weight holders. And right now we see that the Nasdaq has managed to close above the 200-day moving average. So that's another positive sign for the Nasdaq. So if the Nasdaq continues to advance, the first resistance that I'll be taking a look at for the Nasdaq is this price area of around $378. So this is likely to be a key resistance area for the Nasdaq because firstly, this price level over here at around $378 to around $380 has been a key previous price area. So you can see previously over here there was some resistance encountered by the Nasdaq, and over here it encountered some resistance before it managed to go above the resistance, and after prices of the Nasdaq move above this key area of resistance, when it declines and it found support there. So it found support over here and over here. So this price area of around $378 and $380 is a key price area to take a look at. The second reason why this is likely to be a key resistance is because of the 50-day moving average. So the confluence of two factors, the first being that this is a key resistance area, and then the second is that the 50-day moving average is likely to also act as a resistance for prices, means that there will be a confluence of factors providing resistance for prices at this price area of around $378 to $380. So if prices of the Nasdaq continue to advance, the first resistance will be probably this area over here. And then what I want to see is that if prices decline, it declines over here and then it finds support at the 200-day moving average and then continue back up and making higher lows and higher highs. That would then confirm that the decline and correction in the Nasdaq is over and that a new uptrend is in place. So these are my analysis of the overall US stock market. Hopefully you have enjoyed and learned something from this video. If you did, smash the like button because it really helped the channel grow and allow me to produce more content such as this. And if you want more weekly stock ideas and stock market news, you can join my Facebook and Telegram groups. In those groups, I share my weekly stock ideas watch list and also provide news updates on the stock market. So if you want to join those groups, I included the links down in the description below. I'll see you in the other videos to your financial success.